it's Matt Simpson here from Forex.com, and I'm going to look at why the Kiwi dollar could outperform the Aussie over the near term, even though both of them have bullish structures. Now, starting on futures positioning, on the left you've got the Aussie, on the right the Kiwi, and it's been pretty bullish for the Aussie overall. You've got net long exposure for most asset managers reached a record high once again, and large speculators' bullish exposure is just below a 13-year high. Gross longs trending higher as well. There's not really an appetite to short. So because of that, without traders betting against this trend, I have to assume the trend's going to continue higher over the coming weeks. But you can kind of see already that the momentum is being lost on the Aussie price action. So perhaps you're going to have a period of consolidation. As for the Kiwi dollar, there's not really a trend on the weekly chart. It's effectively oscillating between these 2 points. That said, we've been net short for quite a while, and it did reduce that net short exposure last week a tad. Now, this is not a compellingly bullish case, I admit, but you'll see short in the daily chart that things have changed. Taking a closer look at the Aussie, the weekly chart on the left, we can see that this week's high stopped just short of that May 2022 high, which is itself just below the 73 cents mark. Now, the candle itself yesterday saw a decent close above 72 cents, and that's a move I've been looking for quite some time. So constructively, it's looking good. However, what I don't really like is how the Aussie gave back nearly half of its gains by the close of the day. So whilst it convinced to break out above 72 cents, it's found resistance and it's pulling back from it. So from here, I think dips remain preferable, but we could be looking for a pullback maybe towards 72 cents. The near-term bias for me remains bullish above this swing low. Dips preferred, but do keep in mind you've got 73 resistance, you've got the monthly R1 around 73.27. So I think there's plenty of resistance there to take the wind out of the bullish sails as well. As for the Kiwi dollar, it's an oscillating market. It's not a particularly pretty one, but you see on the daily time frame, the breakout on yesterday was far more impressive than seen on the Aussie dollar. Notice on Tuesday that prices held above the 200 and the 50-day exponential moving average before bullish range expansion unfolded, and we saw this decent break above this prior range. Now, I think the only reason we saw the high around here is because we had the 60 cents level, big round number, near the monthly R1 pivot point. Now, again, we may get some sort of consolidation or pullback around here, but over the near term on this time frame, the Kiwi looks more constructive to me than the Aussie dollar. I think we could be heading towards 61 cents. And this brings me nicely onto the Aussie Kiwi, which is seeing momentum turn lower with this rising wedge pattern, which, if successful, could see a movement back towards this swing low around 119.32. It's also called an ending diagonal from the Elliott wave theory crowd because it's generally seen at the end of impulsive moves. Now, I'll hold reservation on whether it's a big pullback at this stage because I think this trend is very constructive indeed. If you look at the monthly chart, we've just seen the best 12-month rally since 2008, and it really accelerated since that April low, but the trend actually began back in March 2020. So with no immediate threat to a reversal on the monthly time frame, I have to assume at this stage we're at least going to be waking up to this resistance level near the 2011 low. But of course, on the daily time frame, we've got this daily pattern playing out, and whilst prices remain beneath these swing highs, I think a movement down towards this low seems more likely. But I'll also be keeping a lookout for evidence of a swing low for prices to return to this very, very strong bullish trend. As always, hope that's useful and wish you best of luck with your trading.